The U.S. central bank is joining its global peers, cutting interest rates for the second time this year. But the outlook is cloudy amid division within the ranks of the Fed and verbal pressure coming from the president. Steve Liesman joins us right now with more on all of this. And Steve, it's great to see you.
Thanks. Good morning, Becky. You know, we have all this talk about a divided Fed and a President Trump's criticism. I wonder if we're missing a more important development here for investors. Let's think about this. The bond market took the Fed's rate cut decision yesterday as ultimately hawkish. But the stock market, down a bit this morning, held up pretty well yesterday. Let's take a look at what happened to the probabilities. October probability is now at 39%. That's down from 52%. That's probably of another cut. That same cut probability for December is down 10 percentage points. Now, it's within the margin of error there, but slightly hawkish. Also, the idea of that second cut coming down a little bit from where it was in March. But stocks, after selling off, rebounded sharply. As Fed Chairman Jay Powell said, the Fed doesn't think there's much more to do in the way of rate cuts, but will do more if needed.
If the economy does turn down, then a more extensive sequence of rate cuts could be appropriate. We don't see that. It's not what we expect, but we would certainly follow that path if it became appropriate. In other words, as we say in our statement, we will continue to monitor these developments closely, and we'll act as appropriate to help ensure that the expansion remains on track.
Okay, the Fed cut by a quarter point, brought the new target down to 1.75%, reversed 2 of last year's 4 rate hikes at this point. The vote 7-3, first time since 2016 that 3 voters dissented. One official, James Bullard from St. Louis, he wanted to cut rates by 0.5 percentage point. 2 officials, Esther George from Kansas City, Eric Rosengren from Boston, they didn't want to cut rates at all, the second time in a row that they dissented. The dissent was actually broader, though, inside the Fed. In their forecast for the Fed funds rate, just 7 dialed in another cut this year. 5 forecast no more cuts, and 5 didn't appear to want to cut at all yesterday. So the market is either throwing out those forecasts, thinking the Fed officials come around, or it's comfortable, perhaps, with maybe a little less in the way. So I think that was a good development.
They didn't think the Fed funds rate would be there, but then 3 of them went ahead and voted to go with the cut anyway, just based on the forecast. You would have guessed 5 of them would have said no?
I should have explained this. You know, there's 17 members.
Yeah.
Only 10 have the vote.
Not all of them have votes.
I knew you knew that.
I forgot.
I didn't know whether or not to correct you live
on
that.
No, I'm glad you do. I'm glad you did.
Okay.
I was trying to think through how you get the math on that.
Right. So 10 voters, 17 forecasts.
Got it.
I mean, just say we're not sure what we're going to do. It depends on what happens. That's okay.
Get rid of the forecast.
That's okay, isn't it?
I don't know why he didn't say that before. What's weird is back when he said mid-cycle adjustment, why did he feel a need to limit either way? He felt a need to somehow curtail how much the market was going to dial in. I think he might have hit the right tone yesterday.
Yeah, I think
so. Do you guys have that 2-year chart up again? That's a pretty decent spike, 10 basis points on the 2-year, if you think about it. And then stocks that came down, that's a pretty, El Capitan right there from Yosemite, right? I mean, that's a pretty good chart right there. And the stocks came down and came back up.
I mean, when you're this low, how many more can you promise anyway?
You don't have much more to promise, Joe.
That's what I mean.
You're coming close to being out of quarter points.